So joining us now is Jeff Meskin. He's a partner at Brothers Harriman to break down how alternative investments can play a key role in well-balanced portfolios and where the savvy investors are putting their money today. Jeff, we love having you. We always want to know how the other half is living. So I guess sort of first of all, as we work through this environment of so much fluidity when it comes to the macroeconomic environment and how that may or may not be influencing the market, what are your wealthiest clients asking you, worried about? What keeps them up at night? What's the key strategy?
Well, we look at the market through the lens of our clients, and essentially they're managing money mostly on a generational basis. So while there's price volatility in the markets all the time, we're really focused on value. We're focused on finding value and growing value. And so if we think about different ways to construct portfolios, we have sort of a traditional approach in that 30% of our portfolios are fixed income related, about 45% in public equities, diversified across both the globe and market cap ranges, and then a real focus on alternatives. Alternatives and what we call independent return vehicles is sort of where we are really focused these days. And that's what our clients are interested in.
So question for you, when you look at the alternative side and you look at fixed income and the spreads are so tight, where do you find opportunity in the alternative space there? Because if you go out, 3-5 years, corporate spreads are so, especially in investment grade. So where are the opportunities there?
Well, that's right. It's a very good question. And we're finding value in an area of the fixed income markets that we call structured credit. So if you think about structured credit, it goes by a number of acronyms: asset-backed securities, CLOs, CMBS, RMBS. And they're sort of difficult for mainstream investors to access. They're really done on a private basis. And it's buying into a pool of loans, either hundreds or thousands of commercial loans or corporate loans and consumer loans. And it's really the way that the financial markets are funding themselves. If you think about non-bank lending now, it's larger than bank lending. And these vehicles are important. And why we're finding value, to Surat's question, is that if you take these loan syndications, the interesting thing is that you can buy various tranches equivalent to the amount of risk you want to take. So if you think about this, you can take AAA risk, you can take single A risk, you can take junior equity risk. But if you just think about single A for a minute, the structured credit vehicles are delivering 200 basis points more return than their corporate equivalents, and doing so with historic track records where there's preservation of capital.
So staying in fixed income, to something that's very, very traditional, I guess, municipal bonds. What's the role of munis given this interest rate environment, given the sort of tax relief that the very wealthy just got? Are they still that important, and how do they perhaps provide a kind of risk counterbalance to some of the other alt moves you want to make?
Yeah, historically boring munis are actually very exciting in this environment. If you think about this for a minute, municipal bonds in the duration of 4 to 5 years, we're funding America's infrastructure. That's hugely important, so that's a plus. And then when you think about how investors are earning returns, if you happen to be a high income earner in a high income tax jurisdiction, high quality munis can generate returns of around 7% today on a tax equivalent basis. So those yields, when you gross them up for their tax equivalency, we think are really attractive on a long-term basis. And we've been extending duration right now with our clients.
If Kelly Evans were here, she'd be really excited about that. She loves munis. Jeff, I know there's some names that you and or your clients like, and we love to name names here on CNBC. So can you give us some that you're excited about? Are you Mag 7 fans?
Well, we are invested in some of the Mag 7. The way we look at it is we are buying long-term durable businesses with massive competitive advantages. And so those yield a number of answers. Microsoft has been one of our largest holdings. And of course, their earnings last quarter were terrific. The growth that we're seeing in the Azure component of AI, I know you were talking about that with Surat earlier, fantastic. We like network businesses like MasterCard and Visa. And then we've had a long-term holding in an aerospace named TransDigm that we've owned forever. And TransDigm is one of the most interesting companies out there. I know you own it.
So we own 4 of those stocks.
Okay.
So, and I think those are fantastic. We call them serial compounders.
Okay.
Because over time, these are companies that have moats around their businesses, especially Visa, MasterCard, and TransDigm. So if you look at kind of TransDigm, you were talking about that, it's aftermarkets for airplanes. So as Boeing has more trouble producing and we can't keep up with the demand, these airplanes are being recycled and you get those parts. So,
and if you think about TransDigm, it IPO'd in 2006. It's compounded in excess of 30% since then.